Here's that wholesale entry MMTs. Here's that top reversal on that Google. Here's that 1460 bid. We took it down there. We got a couple of people hit down in there. The thing about it is that's how that bottom got put in that price. That's how that IR was burning at zero. It popped. Not only that, we stopped at 0.34. We're at still negative 0.19. So we had a positive. This is what we were up on the day up here, and this is what we were down. So you can see the distances, and you can see it getting made in that double diamond reversal alert, and that's why we're owning the calls, because we know that at the bottom that we just scale a few of these, but that 1420 bid can come into play. So let's see how the 1460 holds. It's 70 by 90. So let's just let them drain it down all the way. Let's just let them drain it down all the way. And then this side of the market is going to peak in price, and this side is going to deflate once we finally get that movement in there. So scaling an entry at 14.60, 1470 is a big difference than buying at 1731 and riding it down. That's what the retail public does. So we're not getting made yet. We're still weak. And we have other bids.
I have one at 14.4.
We got bids at 1420 as the next area. 1460 by 80 is supporting this particular trend ratio here, seniors. And basically, we're going to come. We're coming back down here. We got the fear indicators running high. So the next level is going to be that 1410. Remember, they're $3 off the high almost. This is where wholesale bids come into play. Not the retail buys it at the high and rides it down here, and then we'll never buy it down here like we call it live. And we already put the prices out. That's called talent, pal. This side of the market over here is peaking 30 by 60 on the 590 put with that pullback. So when we hit 12.5, we had a 2.10 positive ratio in the put side. Here on the 580 call, a 2360, and I said 2020. 2010, 2050 area would be an area. The next area here will be 19.7, and then the next area there. We scale the lower end of the contract with very light entry. Very light entry. So if we do want to come down to the 1410 handle or 1390, then we can start adding 10 and 50 contracts and 100 contracts. Right now, the public is in deep on the high, and we're deep buying the low. That's what an SMF option market maker does. How do you like me now? So basically, here's Friday's low, rally to the gap, to the test. I'm at zero, moving the contract down to 13.80 as long as I'm at zero. Okay, I'm peaking at
Mario, someone needs to get in because I can't do it.
Here we are. We finally come down to the bottom. We had a bids out there at 1310. There's also a 1280. As long as that remains on zero and does not spike, we have not made a bottom. This side of the market will be wholesale, where this side is going to set in its retail side up on the top side of the 590 put. As long as this remains weak, we keep making a series of intraday lows. We had a 0.46 positive. We were up 2.94. Now we're down here. That equaled minus $3.96 in our system. Now, as we finally get made sometime today, is that the low is being bought as we have moved other entries down several times. The key to success in entering the wholesale market is to make sure they're only done at one contract until we're finally made in the name. And we're not made here. So you can never buy more than one, even at the very wholesale bottom, just in case we want to go a little lower. That, yeah, you take a $30, $40 stop, big deal. It's when you're buying 10 at the bottom and they bounce $2 is where the money's made, hubba, hubba, hubba.